Okay, happy Friday, you trader nerds. Welcome in. I am Dr. Bobby Gaines, aka Sweet Bobby. Do not forget, after this session, we have what is called a Muscadine Mafia session. And I think Evan and Ed are going to talk a little bit about the Tastyworks and how they use the Tastyworks, what do you call, analysis function, which should be really good. All right, so the market's down 1%. And it's going to be open to Muscadine Mafia. It's going to be open to the Hello Ladies Gang and to the Ninja Nerd. So that'll be a great session. So the market's down 1%. The market is bipolar. It doesn't know what it wants to do. It's up over 1% yesterday. It's down 1% today. It's just crazy. And I know y'all are looking at farm payroll and all that kind of garbage and, trying to read into it. And you know what? I don't care. We are down a little bit today, down $278. That'll be still my heart. So let's see what our Greeks and ratios are today. So the old Greeks and ratios are 51 and 35. 51 and 35. Oh, I remember when I was 51, like it was last year. Actually, it was last year. And then 35. Look at us increasing our theta. I like that. There we go, 0.09. And I guess the VIX is, let's see what the VIX is. VIX is at 18 or 19, I think. Come on, baby, pop it up. So we'll call it 18. So VIX is at 18. And I always round down on the VIX. Y'all do it however you want to. And the buying power usage that we're using is 59.56. 59.56. Okay, 59.56. So we're green, and we're blue. So that means, hey, Bob, we got to put on a trade. Did y'all hear me talk to Scott Sheridan today on Tasty Live? I called in during the little segment and said, hey, pal, we want our stuff fixed. I don't think he knew what I was talking about. So where do I go? I do my put debit spreads at 60 days or close to 60 days without going under. That's where I go. So I'm going to go the 77-day. And I'm going to go not an iron condor, Bob. We're going to do a long put vertical, 50 points wide. And here's what I was trying to tell him. He told me to call the dev technology team or whatever, so I'll call him. So we got to get this fixed. Hey, it ain't bothering us today, is it? So there's $9.75. Pop it up to $10 so we can get filled. And Schwank, you know what? I may put on 2 contracts today because the market's down 1%. That's the time you want to put on trades, y'all. Let's put on 2 of these puppies. There we go. And then I'm going to do a new trade out at 90, closest to 90. Doesn't matter over or under. And we're going to go sell that 12 Delta. 12% probability of being in the money. For those of you who think we're talking about an airline, Delta is an approximation of the percentage of being in the money. So we'll go 2 of those. We're going to try to get that mid price close to it. Look at that, y'all. 28.75. You greedy bassinet. I didn't say it. All right, so let's make that less advantageous. All right, let's just penny it down. Let's quarter it down, baby. I got all day. I ain't got nothing. Well, I've got to go to a basketball game in a little bit. That's funny. There we go. Look at their patience rewarded. There's my new trade. Now, in this one, this is my freehand account, but I am trying to take risk off after 30 days. So let's go see my positions. And here's my long stuff here. See if there's anything that we are in. Oh, my gosh. Look at this, y'all. We've been in this trade for 28 days, and I've made a cool 69%. You fat, black, glass-wearing son of a gun. How much is enough, Bob? How much do you need to be happy? Me and Beth ate at the Ruby Tuesday today. I had the salad bar. I don't like salad, but I like their pasta salad. Oh, it's so good. 1,131 calories. I had English peas, corn, cubed ham. I had to count it as macaroni salad, French dressing, black olives, and 6 saltine crackers for 1,131 calories. And I'm going to have barbecue tonight with French fries and coleslaw. I cannot wait. All right, so what old Bob was going to do is old Bob is going to take my $90 of profit here. Hello, ladies, come here often. and I'm going to close that. I'm going to take my $93 and I'm going to go to the house, go to the basketball game, watch my kid play basketball. You know, they say white men can't jump. Well, listen, I found this out when I was in college. When I was in high school, we didn't have, my high school was entirely white. So we didn't have any black people on any of our teams. But I thought all black people could play basketball. I was just growing up. It's not no stereotype or anything. It was just like, I just thought black people play. I got in college and I met a guy from Ethiopia, and he was out there, and I picked him to be on my team at the intramural thing. And I said, dude, what is wrong with you? How come you can't play basketball? He couldn't even speak English. He didn't know what I was talking about. I said, dude, I thought you were going to be good at basketball. Anyway, my son is black. He ain't that good at basketball, y'all. Y'all pray for him. He'll get it done. He's young. Now, my little redhead, that little girl, you better watch her. All right, what was I doing now? Did I close that or is it working? Did we close? I can't remember. I was talking too much. All right. It's like thinking all white people are good at bowling. Y'all, we are not all good at bowling. I know y'all think we are. No, we're not good at bowling. All right, so I closed that. So what am I going to do? Oh, Bob is going to spend part of my money, and I'm going to go buy me a hedge to the downside. Now, I don't think I bought any ESs over here, have I? Let's see my position. Yeah, I have. I bought some here. So we've been buying these 7-day hedges. So let's go buy us a 7-day hedge. Something cheap, y'all. Where we've been going? About a quarter or so. Buying us a little put for a quarter or 15 cents. So if I buy something.
You're in the MES and not the ES.
Oh, how do I get back in MES? Thank you so much, Al. I appreciate that. So here we go. We're going to go 7 days. And this is Avi's idea, right? So Avi said, why are you even using MES for your hedges when you can buy some cheap stuff over here? It gives you a lot more protection. So I think we've been buying them at about 15 cents. Isn't that $9.32 or so? Let's see what that'll be. So let's buy us a 7-day, 33.25. Let's see what this 15-cent one will do for us. Gives me $510 in credit, and that's going to cost me $10.87. Well, hello, ladies, come here often. Let's fill that one. There we go. Swang. Just got me a little bit of protection there. All right, so let's see how we're doing in this account now. So this one, we are got to refresh all. We're at 1.81% on the year. Okay, so we ended January up 1.61. So we're at 1.81 while the market is up 7.32%. You underperforming bassinet you. That's okay. I'm good. I'm going to close this. I'm just going to close this whole spreadsheet. I don't need it anymore. All right. So let's go back to our IRA. God, this is fun. Hope y'all love this stuff. I love this stuff. I eat, breathe, and sleep this stuff. And I signed up to be the assistant coach for my daughter's softball, which is going to be fun. 109,259. 109,287. Let's go with that. 109,287, bro. 109,287. Come on. 109,2. Good Lord. We're just losing money left and right. Bro. No, $839. What happened there? That doesn't sound good, especially with all the hedges I've been doing. So we're up 2.18% on this account. Let's see what our Greekson ratios say. I bet we're blue. We're always blue in this account. I'm going to sell like 18 contracts today. By gosh, I won't be blue no more. Now, this is Ed's fault, y'all. Normally, it would have our total deltas at the bottom, but no. Ed got us into all this garbage. So this means that we can't figure it out. So 154 minus point was roughly 1.54. So 154, 91 minus 5 is what? 86. 154 and 86. Unbelievable. Unbelievable. 150, what was it? 154? Or was it 144? Yeah, gum, Ed.
155.
155. 155. And what was this?
96.
96? Good Lord. When did that swell up? Wait a minute. 91 minus 5, 86. 91. Yeah, 154 or so and 86. Okay. Oh, jeez. Hey, we might be over 0.1, y'all. Let's see. Well, no. Dang it, dag it, nabbit. All right, so we said the VIX was about 18. How much buying power are we using? I may put on 15 contracts today. This is going to be good. So I got to subtract 160 from that. So let's just say 22 minus, I don't know. Let's just say it's 22.8. I can't do the math in my head. 22.8 is my buying power. 22,800. So we've got green, and blue, baby. I'm doing 3 contracts. Yes, I am. No, I may do 4. I'm going to do 4 contracts. I'm going to play it dangerously. So I'm going to buy my stuff. First of all, let's see if there's anything that we're supposed to close today. Probably not, because we've been closing the crap out of stuff. So let's go to our trade tab. We've got an auto close signal in here. See if anything says close. Swing, baby, swing. Nothing. Right? Nothing to close. So I'm going to sell 4 contracts today. So let's go over here and do our put debit spreads first. Go to trade tab, go to MES, and then we'll look what our risk is in the account. So let's go sell 4 of these puppies. Because normally I'm a 2 contract guy, but I can't get enough data in the account. We're going to underperform the market greatly unless we can keep this thing going. Got to feed the beast, feed the beast, feed the beast. Ooh, look at that crib. Yeah, baby. So let's move that up a little bit. 31. Let's try 31. We'll do 4 of those. So 3680s for 31. 3680s for 31. Look at this. Look at this. Nothing. Jack squat crap. Come on, little girl. Come here, baby. 3075. So 3680s at 3075. 3680, 3075. Here, let's put that in. 3680, 3075. 3680 at 3075. All right, so we'll call this, what will we call this? We'll call this MES 4, and we'll call this, I don't know, y'all, NP 19, naked put 19, and puts, and these are naked at 84 days, entered in the year of our Lord 2/3/23. Look at that, $609.12. All right, so now we're going to do some put debit spreads, MES. We're going to do 4 of those, and we'll call that PDS 19, because that goes with the nakeds. And the strikes that we're going to try to get are whatever we did over here, which was the what? Something doesn't look right. MES. Oh, here it is. MES. We're going to go 77 days, 39.80, 39.30. 39.80. 39.80. 39.30. 39.80. There we go. Buy that one. And we're going to sell the 39.30 for $10. And I said $10, and we're going to do 4 of those. All right. 39.80, 39.30, 77 days. Feel me, baby. There we go. Let's put him in. So 39.80, 39.30 for $10. Did 4 of them. Puts, debit spreads, 77 days, 2/3/23. There we go. There you go, Bob, oh Bob. Now, let's see if there's something we want to close. We don't have anything that's been in for 30 days, but let's see if there's something we can take out. So let's look at our positions. Let's look at our naked positions in specifically. What crap was that? The devil was in. All right. First of all, let's put our unallocated stuff where it needs to be. So here's a put debit spread, right? Hit your control key, hold that down, move to group, put debit spread. We're going to eat at the Southern Lady tonight. I cannot wait. They made the best barbecue plate I had last week. They made my barbecue swimming. I say, I want my pig swimming and I want my coleslaw swimming in barbecue sauce. If you've never had coleslaw without barbecue sauce on it, friend, you are missing out on a delicacy. How have we made $4,300 here today? All right, so let's go to our naked puts. We are put sellers after all. Look at this. We've got 4 of them here, y'all, that we could just slaughter. I mean, we're only looking for 55% profit. How much is enough, Bobby? How much is enough, young man, for you to be happy? So let's close them. We're up 67%. So let's try to close them for 10 1/4. Because we're cheap. Can y'all imagine us at the Red Roof Inn? You think we ain't gonna have a time? Huh? Ed's bringing a karaoke machine. We'll be up to 2 or 3 in the morning drinking Dr. Pepper and doing karaoke. It's gonna be so much fun, y'all. Let's plan on getting there Thursday night. Maybe Thursday night will be Applebee's night. Or we'll get Domino's Pizza delivered to the room. Huh? Gotta be fun. All right, so we got filled at 1050 on our 3490s. Remember that. 1050 on our 3490s. 3490s, 4 of them. I saw it here. That ain't it. 3490s. 3490s. Oh, it's so hard to find these things. And y'all help me. 3490s. We closed 4 of them. Hell, I probably just closed the ones that okay, here's 3 and 4. Oh, good. I closed the short from one of my things here. So we closed those at, what did we close that at? 1050. Let's put that in. We close this one at 1050. We're going to get to play the music. We hadn't played the music all day. And we close that. Well, hello, ladies. 2, 3, 23. And little old Bobby made enough to go to the Southern Lady tonight. $93 and
where we're moving on now to the side, to a deluxe apartment in the sky.
Now that ain't nothing, y'all. Watch what we did here. We've closed these 3 for $10.50. And I'd almost play the music again. Look at this, y'all. I mean, I may get a room at the Four Seasons anyway. Look at this, y'all. We made $249.93. Make it rain, baby. Make it rain. All right, here we go. All right, good. So we close up. Now, let's look at our little new chart that we got here. So we've got 50 naked puts. We've got 52 put debit spreads. We've got 46 long hedges, which is actually like 64 because we got 2 ES hedges. So I say we don't have to do another put debit spread, but we can roll out a couple more of those puts we just took off, right? That's what I could do. So I don't have to sell all 4 of them. I closed 4 today, but I kind of want to keep this number the same. Right, my neckies to my put debit spreads. I'm gonna sell 2. So let's go and roll out 2 of those. I could roll 4, but I'm not greedy, y'all. I'm not greedy. You know what? I may just roll out 4. I'm not. Let's see. Where you gonna put them, Bobby? Any dang where I want to. I kind of like that 12% though. So why don't we sell 4 of these 36.75s? Let's do 4. Let's just do it. Let's take some. The market's down to 1%, y'all. I mean, do it. Do it now or forever hold your peace. So let's do that. Let's sell 4 of those. Brings in another $600. Oh, how sweet it is to be loved by you. 30.25. We did the 36.75, 30.25. 36.75, 30.25. 36.75, 30.25. So we did the 36. Dang it, I done forgot. The mind is the second thing to go. I can't remember what the first one is. All right, so 36.75, 30.25, 36.75, 36.75, and we did it for 30.25. Okay, that's good. So we're going to call this since we're rolling something out, and I did 4, right? We did 4 of these puppies, and I'm gonna call this NP17 roll. And they're puts, they're naked, and they're at 84 days. Year of our Lord 2323. All right, there we go. So we brought in $1,200 of premium, and we bought $211 of protection. And remember, we made like $300 worth of profits. Would it be sad of me to buy some protection? No. So let's go to our Analyze tab. Let's see how we're looking over here. So hide simulations. Let's look at everything. Remember, we got to go down here. This is called the ED principle, whereas you got to take off your little put debit spreads. I mean, your treasury bills, because it will not give you got to take these off. This is the ED factor. ED got us into all this stuff. And now we're just, right, here we go. All right. So $110,000 account. What is our issue? Let's move this to today. All right. So, here's our risk. If the market were to drop 20% and the vol went up to 57%, we'd lose $82,000. Well, hello, ladies. So I sit there and say, Beth, we could lose $82,000. Are you happy with that? Beth says, no, Bobby, how would we go to Applebee's? And I go, you know what, Beth, you're exactly right. So let's go and get some E-minis. I may even buy 2 of these things today. Let's get this to an acceptable level here. We made $300, y'all. Can we spend $30? Can we spend $30 on some protection? Huh? I mean, think about when you was dating your spouse before y'all got married. Y'all was probably buying protection. Why not do it now? So let's go buy some $15 stuff. Now, do you buy 3 $15 ones or do you buy 1 $45 one? Do we need to go through that analysis again? Do y'all need that? Do you need me to show you the difference between 3 3310s for 15 cents or 1 option for 45 cents? Yes, you do. I know you do. So let's look at these. Let's analyze 3 of these. Uh-oh, wrong way. I'm not used to buying stuff. Ask Beth every Christmas. Bobby, you didn't give me number. Well, Beth, I forgot. All right, so let's analyze this trade. So let's see what kind of protection this gets us. All right, so ES, we're going to hide positions so we can look at the simulations. All right, so make sure that's the only thing we got here. I said we're going to make sure this is the only thing we got here. Okay, so let's undo that. That goes flat, so that's the only position we got. So in the event that we get a crash, that would get us $25,000 of protection. Yes, indeed. All right, so now let's go and compare that to just buying 1 at 45 cents. So you're spending the same amount of money, right? So 3 at 15 would equal 1 at 45 if my math is right. Let's see what that looks like. So if we bought 1 at 45, let's buy the closest one we can for 45. Let's analyze him and see which gives us better protection. Everybody agrees it costs the same. We got more commissions on the other one, undoubtedly. But let's see who gives us the biggest bang for the buck. Okay. So let's see. This one gets us $8,288. Well, I need, hold on, let me get my thing. Where's my 20% line? Here we go. And set up your price slices, y'all, on all of these things to be just the same. Everything that you trade, you want your price slices to be exactly the same. So 20% down, this is this, then we would be up $23,274. Okay. So remember that, 23,000, or would I rather be up? I said, would I rather be up? Where's my darn thing at? Where's my stuff at? 23,000, or would I rather be up 26,000? What'd y'all rather do? No, it's kind of good buying that 1 for 45 cents. I mean, with the commission saving. You know, there's not much difference, is there? Buying 3 for 45 cents gives me 25,000. Let me look at it again. Or we could buy 1 and get 23,000. I don't know, man. I think I'm gonna buy the 45-cent one. Let's do that. Confirm and send. 45 cents. Cost me $24. Got to spend money to make money, people. So we bought the 3775 for 45 cents. 3775 for 45 cents. 3775 for 45 cents. And we're going to call that ES because it is ES, actually. We only did 1. So, you know, sometimes you can, either way, that's fine. So we're going to call it looking good so far. Oh, thank you. Been working out, this things at you. So we'll call this an ES long put 5. God, y'all believe we've done 5 of these already? Puts, and we'll call this a long hedge. That's 7 days out. 2, 3, 23. Now, first of all, I need to see if anything has expired here. Current days left in trade. Let's see. Make sure this ain't down to 0 on anything. Current days in trade. Days left in trade. 25, 25. Make sure there's nothing I need to close out. Yeah. So in our little hedges down here, some of us have got 7 days left. Some's got 6 days. Some's got 7 days. Some's got 5 days. Good. All right. So now let's go look at our risk to the downside. You know, you want to sleep at night, y'all. You want to sleep at night. So let's go hide simulations. And now our risk to the downside is a sloppy $52,000. I can sleep with that. I'm good with that. All right. Questions, comments. Yeah, it starts paying from $37.75. You're exactly right. You know, pays early, doesn't it? So I like that. All right, so let's go to the other Kim. What's the market doing? It's just so whipsawed all day. It's just crazy. Let's see how we're doing over here. So over here, probably going to be down a little bit too. So we got $30,020. Okay, $30,020. See how that looks like. I said, let's see how that looks like. Oh, here it is. $30,020. How can I get the Excel spreadsheet? Okay. It is in the, okay, you got to be Muscadine Mafia, Ninja Nerd, or Hello Ladies Group. And it's pinned at the top of the page of those chat rooms. So the cheapest way to get it is to pay $2.99 for a month and then cancel. Now, what some of y'all found out is these things have expiration days. Some of y'all figured out that, hey, I'm going to join it for $2.99, then I'm going to quit. And then all of a sudden, you can't get your spreadsheet no more because it's, you know, they run out after a year or so. I don't know why. I don't know if I did that on purpose or I can't remember. What did I just do? Oh, $30,000 and what was it, $20? Y'all get me sidetracked. $30,020. Probably down a little bit. $30,020. Dang it. Down a little bit. Dang it. 2, 2, 3, 23. Let's go look at our Greeks and ratios. Shall we? Shall we? Come here, baby. All right. So again, Ed's got us all mixed up. So you got to kind of add these together. 63 minus, 1.5 is, I don't know, say minus 2. 61 and, oh my gosh. 61 and what is that? 24? No, 20. Oh, 23. So say 60. Oh, it's moving on. 62. Darn Ed. 61 and 23. I think that's right. If that's wrong, just tell me. 61 and 23. Unbelievable. Jeez. 61 and 23. So we're 61 and 23. I said we're 61. Damn it. And 23. Okay. So we don't have enough theta in the caboose. And our buying pair, old pair, is $77,000, say $7,000 buying power. What would you do? What would you do? We're a little too long. You know, a little too long deltas, but I'm blue here. So let's see if we got to close anything. Let's look at our trade tab. Look at our auto close signal. No, I don't see anything. Do y'all? Let's go see if there's something we should close. So let's look at our long puts or our naked puts. And we got naked puts. So, you know, how much is enough, Bob? How much must you have? You've made $102 on it. Close that thing. Okay. 69%. Let's close him. And let's don't be extraordinarily greedy, but let's work it down a quarter. So we're closing him at $9. Yeah. So we closed the $34.50 at $9. Let's go find him. $34.50 at $9. $34.50 at $9. $34.50. Here he is at $9. So we made on him. This is a new feature of the new spreadsheet. The new spreadsheet says we made 68%. Yeah. $99.56. Hello.
Well, we're moving on now. To the side. To a deluxe apartment in the sky.
Now, if old Bobby makes $100, can I not buy a hedge? Is it not okay to buy a hedge? Let's go buy us a hedge. Let's spend $10 on a hedge. So let's go to ES. First of all, let's look at our Analyze tab, see what our risk is on a $30,000 account. Hide simulations. So it looks like our risk on a $30,000 account. Shaw. Wow, we got some hedges here, y'all. Look at this. Is that right? Surely that's not right. Portfolio beta weighted. There's my ES stuff. There's an MES stuff. Should have everything marked except for my T bills, my ED bills. I'm gonna start calling them EDs. My EDs are not marked. So that's it. Look at this, y'all. Unbelievable. It says that if the market crashes 20%, we're up $1,700. But if you take into the effect of this, we're down $4,600. That's acceptable risk. I don't have to buy anything. I think I'm, good. Now, what we will do, though, let's see what our risk is. Let's go ahead and trade. Since we closed that one, let's go ahead and sell us something farther out at 90 days, right? Let's replace it. So let's go to the 84. Let's sell us a 12%, some at 12%. Anything at all. Let's do this one, the 3680. And we'll go up to 3050. See if we get filled there. 3680 at 3050. Hey, y'all, listen, Ed can dish it out too, y'all. So 3680 for 3050. 3680 for 3050. 3680. That damn Ed. How many times we say that? All right, 3680 for 3050. 3680 for 3050. Now, this was rolled out, right? So let's see what this is. This is a micro. We rolled him out. So we did one contract. And we're going to call him the NP, 15 roll. Puts at 84 days. So he's naked at 84 days. 2, 3, 23. So we brought in $151. Yay! Now let's see what our theta is. We were at 23. And now we are at, again, we got to do this thing here. So we were at 23. Now we are at 32 minus 8 is 24, right? If I'm right. Yeah, so we increased our theta. Okay, so let's look at our overall mix of trades. So over here, we've got this new thing that says we're 21 naked. We're 23 debit spreads. We got 6 short hedges and 24 long hedges. Okay. You know what I think I'm going to do? You know what I think I'm going to do? Since we got 21 nakeds and 23 put debit spreads, I think I'm going to sell another naked without a put debit spread. And then we'll go look at our risk if we need to buy a hedge. So let's go back. Let's sell us something else. I love this. Oh, this is so good, y'all. This is what we call free-handing an account. So let's go to 84. And I want to call this, I want a different strike than what I did a while ago. So let's move our strike around a little bit. Let's be uber aggressive. You know, too. Let's sell this 36.90. And let's try to get 31.50. So 36.90 at 31.50. 36.90, 31.50. 36.90 at 31.50. Look at this great 36.90 at 31.50. Oh my gosh. Y'all, this is so good. 36.90 at 31.50. So we are at, let's look at all this great profit. I mean, profits. I'm counting my chickens for the hatch. So we'll call him a NP, I don't know, 17 or so. Naked put 17. And then we'll go look at our risk and see if we want to put some of this money that we're bringing in into work for us. So 84 days, 2, 3, 23. Okay, so we sold 2 naked puts. So now our little thing shows that we got 22 nakeds and 23 put debit spreads. Now let's go check our risk to the downside. All right. See what it is. So now my risk to the 20% is down $12,000 on a $30,000 account. You know, we made $100 on that one, and we've been selling the crap out of stuff. Let's do buy us a hedge. You want to? You want to? So let's buy us a cheap little $10 hedge. So let's go 7 days. Let's buy us a 15-center. That'd be $9.32. If my math is correct. Let's buy something for 15 cents. Just a cheapie. Just for crash protection for 7 days in case Vladimir does something over the weekend. Y'all know how Vladimir is. All right, so let's buy that one. And let's first of all analyze him and see what it gets us. Because we want y'all to know how to do this stuff. We want y'all to know how to analyze. So ES, we're going to hide positions. So only show the simulations. So we're going to get rid of him. And let's see if that's the only one here. Buying that one for 15 cents. Yep. All right. So that's going to get us for $9.32, $10,000 worth of protection. Are you kidding me? That's a no-brainer. Spend it, baby. So $9.32. Cha-ching. There we go. So we bought the 33.30 for 15 cents. 33.30, 15 cents. And that's just crash insurance. 33.30 for 15 cents. 33.30, 15 cents. $9.32. Not much to pay, is it? To be able to sleep at night. And we already made so much money today, y'all. Why would we? I mean, why y'all so why y'all so greedy? Don't be greedy. Sleep at night. So that's a long hedge. 7 days of sweet, sweet protection. 2, 3, 23. So now, let's see what we're doing. Let's put everything back in their groups. And then we'll go look at how we're doing for the year. So let's go show groups. Ta-da. And let's put everything in their little things here. So that is a long put. Move to group, long put. Take these and move them both to nakeds. Control key down, control, move to naked puts. Let's go back to the Analyze tab, make sure everything looks good. So hide simulations. And now you're looking at risk of, okay, $1,800 on the 20% down move. A huge crash. Okay. I mean, how better can you do on a $30,000 account, y'all? I like it. So let's see how we're doing in the account overall. So let's go over here to realized returns. You and I are up 4.19%. We were up 3.41% at the end of January. So we've done a little better since then, right? We're almost up another percent. The market is up 7.3%. We got 22 nakeds, 23 put debit spreads, and really we've got, I don't know, man. If I convert those things, we're really got some long puts here, more than our short. This is really good, really, really good. Let's go to our weekly premium tab, where we kind of keep up with our stats. Let's move over here so you can see it better. So far, our premium capture is 42.78%. We are projecting in our $30,000 account to have $17,000 of profit. At our current capture rate, if we keep selling premium like we're selling, we're going to make a 56% yearly return. We should make profits of $328 per week. We've sold 3266. Our closed profits are $1,400. We're averaging 35 days in the trade. Our average credit, every time we put on a trade, we're getting $61.50. We again expect to get around 56. Is that what this one said? It's a little bit, yeah, 56% return. Each trade that we put on has a positive expectancy of $63.52. Whenever we close a naked put, we're closing them at about 70% profit. I mean, that's great, y'all. We expect our debit spreads to lose 100%. Most of the time, they're not needed. We were able to close one for a little bit of a credit there. So 97.88%. I mean, that's a mic drop, y'all. Mic drop. We're on schedule. If we keep on like we're keeping on, it's early in the year. This might go down. We're on track for 57%. Mic drop. Mic freaking drop.